Hey everybody, this is Jim at SP500chart.com. It's about 4:30 on 7/30/2013. That's July 30th. And we're going to take a look at the chart. Kind of in the same position we've been for the past couple of days. But maybe we can get a little something out of what's going on. Before we do so, before we even look at it, I need to remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy that draws lines on charts. So let's take a look. Okay, we're starting out here with the 30-minute chart just to kind of give us our context. The first thing is, at one point I thought we may be having a left shoulder, a head, and then we would get a right shoulder forming that would take the markets up to about the 1750s. But we never got that right shoulder that would turn this pattern into an inverted head and shoulders pattern. So that's something we got to kind of account for going forward, that things are not quite as certain as far as any upward momentum because of the failure of this pattern to complete. However, we got over resistance that was at about 1655, 1654, and not only that, we got up to setting a new high in the S&P. You can see that we had, maybe it's better on an hourly chart, you can see that we had previously set a high at about 1687 in May, and we bested that by a bit. Okay, but all of this movement that was taking us up there was happening between these two lines in what looked to be a fairly controlled move upwards. This lower channel line broke last week, and now the question has been, did it break in order to reverse us back down to test support in the 1650s or even in the lower 1600s? Or did it break in order to consolidate in a sideways move before resuming an upwards trajectory? And for the past 4 or 5 days, that's been the question. And nothing that we've seen has given us a clear answer. So we got the lines in the sand drawn. This is the lower line. If that breaks, then I would expect weakness down to the 1650s. And if that doesn't produce a bounce, then look for weakness on down in the low 1600s. Or we should get support around 1600. But then on the other hand, if this top line breaks at about 1698, then we look to an intermediate target of about 1722, and potentially we got to ask ourselves, even though we don't have our right shoulder, would this still act as an inverted head and shoulders pattern and potentially take us up into the 1750s? Now, let's move in a little closer. I made mention yesterday that it looked like we might be forming a little inverted head and shoulders pattern here with resistance at where I've drawn what may end up being a neckline. And you can see that today, early on, the S&P traded up to that line and then immediately started to sell off. And the sell-off looked like it was taking the shape of kind of a descending wedge, but that broke down underneath the bottom line, regained, then broke the top line. So we're just seeing some is the term willy-nilly. We're just seeing some a little bit less controlled action, it appears. So I still think we have two lines that make sense for tomorrow, and that is, again, this lower line. And if it breaks, look for 1650s as a minimum, because that would be the height of the head of this pattern. And if it breaks, wherever it breaks in the next few days, if it were to break, we're looking at the 1650s. If it doesn't break and we take this line out instead, then we're looking to break 1700, with 1722 as a likely, I would call it a likely short-term target. But going into tomorrow, we're really, and you can see as evidenced by the fact that the S&P moved up 0.06%, we're right where we were yesterday. We almost had a repeat today of what happened yesterday. Fairly decent open, sell-off, a little traction gaining, and then another sell-off. Here we had a good opening move here, sell-off, regaining of traction, and then a little sell-off. You can see it's almost like the same pattern that we had roughly a day ago, a little bit more than a day ago. So guys, that's the video for July 30th, 2013. We're really back where we started, and would have loved to have taken this line out today, but it didn't happen. Let's watch it tomorrow. Maybe it happens tomorrow. This line has now been established as technically significant with today's move, because that now means there's been 1, 2, 3 attempts to get over this resistance level. So we have good data on this line, and if the S&P can get over it, then what we'll be looking at, we'd be looking at a staged set of reactions. And what I'm saying is, we've got a smaller pattern here that would lead to the breakout of a larger pattern with a neckline here. So if we get over this line, we should be getting over this line, if that makes sense. So guys, that's the video. Thank you for your time and your support.